Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we came in this morning and the futures were down a little bit. And you had the DAX up 1%, you had Europe higher, Asia kind of quiet. And typically when that happens, our futures are usually up 4 or 5 handles. So right away, I was a little bit skeptical on today's action. And today's action wasn't crazy or the end of the world. It just was very lethargic. And, oil was weaker, so it dragged down the XLE and just put a little bit of a lid on some enthusiasm. Mix that up with what's going on with the Democratic National Convention and, the political landscape and this and that, and, it's a down day. So the question is there a sneaky move to the downside coming, or are they just chopping everybody up, waiting to get everyone a little bit turned around and frustrated before the market makes a continued upside move? So that's what we're trying to figure out here. If you look at the chart of the S&P cash here, everything still looks very intact. Just the question is, how does the market respond? Okay, here is the 2-year range which we broke above. The 21-day moving average is now coming higher, and we're still hovering above the 8-day moving average. So you're allowed to you're allowed to test the 21-day moving average and even the prior breakout and still be deemed very strong. But as an active trader, if you hold your nose and go underwater with that, you might not be able to hold on. Plus, you're not having a few good days. If you're waiting for this to happen, and then all of a sudden, it doesn't, and we held the 8th day, and we're doing a lot of what we're doing, then all of a sudden, if you're thinking we hit 2,200 over time, chances are you're going to miss the move because you're waiting for the retest or this even. So at this point, it's getting a little trickier. Green day, red day, green day, red day. So there's not much continuity, but all in all, the oscillator went from plus 81 to only plus 10. So we're almost a neutral. If you go to some sectors, it's kind of getting a little bit, not to say difficult, it's just getting a little frustrating. You have this nice trade when it takes out the descending channel. You have to go after it quick. And then all of a sudden, how many sessions have this thing been sitting? 1, 2, 3, 4, 5, 6, 7, 9, 12 sessions of just sitting here. Okay, where either having people get short thinking we're going to come into here or lower, or having people trying to buy a breakout thinking that bull flags usually take 3-4 days before breaking out, and this has been 12, and who knows at this point. I'm still long a little bit, but it's definitely testy. A lot of people remember this before coming in lower, or this before coming down. This is a little different. It's sideways, but we shall see. The IBB is acting a little bit better, which is the bios. We have a big earnings. We have Guild tonight, so we'll see what happens there. All in all, this was our last strategy here. It engulfed the 8th day. It's holding higher. So, I'm still in the camp that it gets up to here. I'm just not long it. I probably should be. Maybe the more of this democratic nonsense, not democratic, I mean, whatever. I can't get into that stuff. It's crazy, the politics. So it's like, how do we get here? What a mess we are as far as Washington and government and et cetera, et cetera. Anyway, here are the bios. If people start hearing maybe that Trump's winning a little bit in the polls, it could help. And there's the 200-day, and there's your prior resistance. So maybe it gets up to that spot. And then you had like tactical plays. In the morning call, I'm like, what, maybe Facebook goes from green to red, maybe Amazon goes from green to red, maybe Google goes from green to red, because they're all up a little bit and they all had decent moves from Friday's lows. Some did, some didn't. Facebook still looks good. There was an out-of-sequence trade here. It really did not get that far down. But all in all, ever since breaking above the 8-day here or even the 8-day here, it's been acting much better. And now it's a stone throw away from highs, and earnings are out on Wednesday. So we shall see. Looks pretty good. Twitter, I had to sell my stock because I do not take stock into earnings, but I bought the calls. So I bought the $19 calls, figuring that everyone has ridden this thing off and that maybe for the first time they actually have really good earnings, considering that everyone's on Twitter with the elections. And unfortunately, all the gun shootings and violence, there's been a lot of news disseminated. And then you're seeing all these advertised tweets, and then you have all these new live streaming events coming in the fall. So maybe he speaks, the CEO speaks optimistically about it and, raises guidance even though he doesn't know. And that's the start of some type of bigger move in Twitter, because if you remember, Twitter's been annihilated from 75 to 55 to even 35. And here it is down here where, LinkedIn got taken over at 26 billion. And this is just sitting here at about 12. So we'll see. So I'm in some calls, and if it misses and goes lower, I'll lose my money on the calls, and if it misses and goes lower, maybe I'll buy it and get a better trade now that the earnings will be behind it. LinkedIn's kind of interesting. Just, people were talking about it. It was up today. There was some kind of article that, that CRM was thinking about giving a higher bid. So if it was thinking about a higher bid than 196, why not at least buy it to get to 196 for an all-cash takeover? It's never been there. So I know lots of times the ARB players that got beat up in some pharmaceutical deals that didn't happen or this and that. But maybe, if you have extra cash and you think it's going to happen, you buy some of this, and when it closes, you get 196. I looked at the options, and there's a spread of like 275 to 475. So buying options doesn't make sense. So, and then if all of a sudden CRM does come in and make a higher offer, bow, you're getting paid. So I think it's a decent play if you're a fund. If you're a fund watching this and you have hundreds of millions of dollars that are sitting there and you don't know where to put it, maybe you put a little bit in here trying to get yourself a few basis points. Apple got beat up, off the bat. Thank goodness for this little red dog reversal we had here last week. I was playing it from the long side mostly, and then you had this red dog reversal, topping tail. Some got short. If that's you did well. You made some good money. This ascending channel also broke to the downside. Another big downgrade today. Earnings are tomorrow after the close. Stock's been broken for a long time. It's been pretty much ever since this earnings report when it gapped down and stayed down, and then boom, it's been below the 200-day since. So I think the best case scenario for Apple would be, a miss. Then they open it lower, and then it reverses, and then everyone starts looking into the iPhone 7, 7 Plus, and then it could also help tech. But for now, market's doing okay without Apple, and it hasn't been really a focus by anyone recently. Every now and then you get this tactical move above the 8-day moving average that fails and breaks. Tactical move above the 8-day moving average that fails and then breaks. So we'll see, after this quarter, which is probably going to be horrendous considering I don't know one person who's got a new phone that has a 6 or 6 Plus unless they destroyed it. We'll be waiting for the 7. So cyclically, it's fine. Oil was definitely, a headwind. We talked about this trend that broke, a few weeks ago. So oil has not been the place to be. The market's done a decent job ignoring it, but as thresholds break, a little bit more concern happens. And at this point, I wouldn't be short oil, but it doesn't seem like it's ready to be long. If you want to put a feeler on, I do think at some point it's going to start bouncing, and so I'd rather see you start accumulating it here versus staying short. Just you have to be able to have some room. XLE still grinding lower, rolled over. I tried it a few times as I thought perhaps this would hold, and it didn't touch it today, and I guess now we'll see how it handles the 200-day. But it's been the only sector that did not make new 2016 highs and rolled over because oil has been rolling over since 51, since I think the G-Man said he's long it, and haven't seen an update since. Anyway, the only thing I'm kind of concerned with, a little bit with the market is, if you remember here, the GDX. GDX, if you would have looked at the GDX right here, okay, you would have thought, hey, look at the nice long run, look at this nice bull flag, it's getting really tight, okay, could continue to the upside, we'll see which way it resolves. No true clue on this day, and then the next day you did get a clue, a little one, that's a little tiny one, of potential weakness to come, a little tiny clue, tiny, and then that happened, okay, so we don't want to see something like this happen, and in the S&P, if you're going to be long it. Yeah, if you're not long and you're looking for a pull-in, okay, but here there was not much of a clue except for this day, okay. So, but this day I'm sure people would have went out pretty long. So this day maybe neutral, okay, because it looked like it was giving up the 8-day, and then boom, then you had a 3-day trade, and then took it out again. So all in all, it's still fine, but when you're playing things from momentum and continuation, you could get trapped. So now we'll see whether or not this continues and is buyable a little bit closer to the 50-day, which comes in here. Oh, come on, why is my pen? Give me my pen. Give me my pen. Well, here it is. So we'll see. But you couldn't really see too much here, and then if you're an active trader, you kind of got stuck. Same thing with Nugget. 50 points below. On this day, it looked like it had a healthy consolidation, let the 8-day catch up, was going to go. Then you had this day, which gave some people a clue, maybe not, and then boom. And now it's down to the 50-day. And just to show you how these triples are are built to fail, this one's already at almost the 50-day where the GDX isn't. So we'll see maybe tomorrow there's an opportunity there. But from day to day, it's been choppier. Like, you see this down day, you think people stayed short into that? Probably not. They were probably thinking we get a gap fill, and then boom. You know, we like when there's continuity. Like, go have a gap and go to the downside, and then get this day. Hasn't been happening. Same way, again, with the spiders. You know, one day up, one day down, one day up, one day down, and still hanging in this range. So we don't want it to be a false sense of security where you're like, okay, we're holding the 8-day, and then one day we gap below it, and then we revisit the, you know, the 21-day. So, but again, we have to see, because believe it or not, 80% of the move of the gains above this spot have all been gap ups, especially this part. These were all gap ups that were sold. So we're up, and we're about 20 handles above the all-time highs, if not more than that. And I would say the majority of it was all overnight. So that's why, you know, it's been a little bit more difficult than you would have thought. This ACIA has been a rock star, thank goodness. A lot of you guys have been involved. You know, here's when it took out that prior pivot. We started putting on Redler all access note to be long it here, or at least get to know it, and now boom. TWLO, I call it TWLO. I don't know why, but that's what I do. Hanging in here, getting tight. We'll see what happens here. Okay, lots of nice pivots, lots of nice trade. I'm not in this overnight, but it does look like it's setting up for something, so make sure to keep that on the radar. Today, Tesla was strong early on. You know, just when they thought it was going to be broken. You know, I don't know exactly what he said differently today, but stock woke back up. It's back on the radar as a stronger name. Held the 8 and 21-day, broke above this range. Some people along overnight. And maybe you get a little extra follow through. Next spot is here. If the futures are up tomorrow, it was relatively strong. We'll see what's next. From this making it look like it's done to an inside day to boom. That's what happens. I had MBLY for a while. I did not take it overnight because earnings are tomorrow morning, and I don't take stock into earnings. Even if it's up $7 tomorrow, whatever, I don't care. It's part of my process. I just don't do it. If you're in it for the last year and that's what you do, it's different. Okay, good. You're an investor. And that's really it. There wasn't a ton of opportunity today at all. You know, if you came in long because we closed well on Friday, you know, it wasn't the easiest to like buy more today, and where it looked like we were bending. Obviously, we're not broken, but we could still bend a little bit here, you know, and if you're an active trader, that could hurt for a little bit, because then if all of a sudden it intensifies a little bit, you might get out before the turn. So at this point, you know, I'm still leaning cautiously long. I know Cooper sent out a note to be short. That's how you have two sides of a market. We shall see. I was definitely longer Friday into today. Today I'm a little bit more, you know, flexible, and I'll wait and see. And hopefully, if we do have gains, they're not just all overnight, that we get a way in to participate versus having to be holding some. You know, with that said, that's that. Have a good night. Tomorrow is another day. Lots of to do. Tuesday, tomorrow morning before the open is Twitter. Then you have also Guild tonight, and tomorrow's Apple, and then Wednesday's Facebook, and then Thursday's Amazon and Google. You got a lot to do. Don't get lulled to sleep because Monday was just one of those grindy, lethargic days that if you did too much, you probably lost a little bit more than you should have. Have a good night.